So my new product that I'm going to take years to develop, I might be able to sell to an existing customer for less. That's a bitter pill to swallow.
Trivialize humans by saying you're just an NPC.
Exactly.
Now we're going to have agentic NPCs. It's like, it's very fully fleshed.
Send our digital twins over to Yankee Stadium and send us pictures so you can be social even when you're working.
Today on the Newcomer Podcast, an old friend, Rick Heitzmann, one of New York's most iconic venture capitalists. He co-founded FirstMark Capital back in 2008 when betting on New York as a tech hub felt like a contrarian take. He's invested in a lot of companies you know, love, or maybe hate. Pinterest, Airbnb, Riot Games, DraftKings, and Discord. So he's going to help us make sense of what could be megawatt IPOs coming later this year with SpaceX, OpenAI, and potentially Anthropic. This episode is all business. Seed rounds, valuations, IPOs. What's not to love? Here's the episode. Rick Heitzmann, thanks for joining the Newcomer Podcast.
It's awesome, man. Glad to be here. I don't think I've been on in a long, long time, so it's great to be back. We've known each other for a long time, so it's fantastic.
Yeah, great to do it in person. I'm excited about this conversation. You know, if you've been watching the channel, we've veered into the political. This is business, if there ever was business. I like talking to you because you're a startup guy, you invest in early stage startups, but you're also in New York, you talk to the bankers, you have a sense of the capital markets and how startups eventually go public. I feel like there are a lot of financial people who want one or the other, and it's hard to find both. So great to talk to you.
It's good to be like that. I mean, we think about it in the power law companies, right? The companies that generate most of our returns usually generate those in the public markets. So you have to be public market aware to really understand where your returns are coming from. And as much as VCs like to be, pickers, or they like to be style makers, or like to be podcasters, we view our job as being asset managers who actually have to think about not only buying, but also selling securities.
You have to get the timing right. I think that's sort of something, right, in and out.
Yes.
So 2026 could be an insane year for public investors and getting access to tech stocks. SpaceX, the now sort of ultra merged Elon company, could go public. OpenAI could go public.
Yes.
Obviously, we've just gone to war in Iran. As you mentioned to me, bankers don't love wars. Companies don't love wars. I'm
not sure who loves wars.
Right, exactly. Nobody does. Do you think those IPOs are likely to happen this year?
I think they're so likely to happen. As we know, the world shifts very quickly. So there's probably two things. I think you alluded to the market hates uncertainty. And what are the most uncertain companies? Previously private companies are getting ready to go public. What else creates uncertainty? Uncertain regulatory environments, things like tariffs and things like an uncertain presidency. And then what else creates uncertainty? Wars, unstable macroeconomic times, very volatile currencies. So this is not a great time for IPOs. I don't know if anyone would have anticipated this war. I don't know if anyone would have anticipated, these changes with the Supreme Court and tariffs or all these things. But I think people were feeling good about an IPO market. And then there's probably going to be one of two things. And I think we talked a little bit about this sooner. Could smaller companies slide in and, say, hey, here are interesting companies, might be great companies. These are founders who've worked very hard for a decade or more building a couple $100 million company, even a $1 billion company that could go public in maybe Q2 after they do their annual audit. And then what does it mean for these mega companies? They're going to raise $50 billion plus. So you talked about OpenAI, Anthropic, maybe Stripe, depending on where they wind up, and obviously SpaceX, that they will have such gravity.
Make your prediction on the most likely to least likely of those.
I think
huge
SpaceX
ones.
is going to go.
It needs it.
I think it probably needs at least. Because I think it's less capital consumptive than maybe some of the other ones. I would say, if I was picking a bit ago, I now that this is this mega Elon company probably does need some capital, especially if they're going to be providing internet from space and doing all kinds of different stuff that's still a bit unclear. But the main thing that's going to drive that IPO is going to be Elon. But OpenAI seems like the company that needs to go public.
Right, it
just
keeps talking up how much money it wants to spend. So
just has raised more money in the private markets, and probably for the first time in history, or my history, I go back in the markets to the 90s, that companies are going to run out of private capital. I mean, SpaceX, OpenAI have accessed every bucket, every pocket, every sofa cushion of private capital.
Right.
And they're about done.
And if there was any more money to come, it would be sovereign wealth, and that the Middle East is now tied up.
Yes, they have,
in a
they
war.
They have, they have their other problems,
right.
and the world's more uncertain.
And it seems like I don't know if you've scrutinized it, but the reporting, the Amazon investment in OpenAI, seemed like there was some potential IPO.
Yeah, there's some stuff like. It'll be interesting in the S1s to actually read the details.
Definitely.
If you think about everything from what does that mean? What do some of the NVIDIA deals mean? What does what do some of the private credit things people have done off balance sheet? There was one reported at X.AI where they did a massive private credit deal to buy NVIDIA, which NVIDIA also participated in the equity. So the disclosure around them will keep you busy for weeks.
Definitely. So SpaceX number one, OpenAI number two.
OpenAI number two, Anthropic. Dario famously says, I don't know, maybe next year I'm out of money, or maybe next year I'm $1 trillion company. I don't think he's going to be out of money, but I think that they're probably number three.
Venture capitalists are very excited about that. I mean, obviously VCs only have so much money.
Well, you've never seen a company scale like this.
Right.
Some of these companies have scaled like things we've never seen before. The consumer adoption of OpenAI is amazing. Just the revenue scale of Anthropic's amazing. And then the market power of Anthropic's really amazing. If, they just can announce I've never seen a private company just kind of announce a product and crash a whole public sector. And that's just going to be really interesting to see. And, it's aside from a Centrini of just being able to say, Anthropic got into security. And that sector's down 10+%.
And, just while we're giving commentary on Anthropic, once it seemed, this fight with the Defense Department was terrible. On the other hand, Anthropic's so weak with consumers. If every, lib mom is about to go get Claude, it seems like they're getting huge download numbers. So it could be
there's
good for the consumer.
You don't know what that means. And then you also don't know how this changes, right? I mean, I think the current administration has had back and forth with every single company where they've been on the naughty list and on the nice list. All of a sudden, the government winds up owning 10% and everything, and everyone's off to the races. And that could be prediction markets or chip companies.
Well, in your portfolio, probably the buzziest is Discord that has had some reporting around. There are some others that are sort of in the mix that could potentially go.
Yes. And I think that everybody's kind of waiting. There's this weird time in the market now where everyone has to finish their audit. And that kind of will probably take another couple of weeks if you're on an annual cycle. Certain SaaS companies are on a January fiscal year end. So that takes time. So it's traditionally Q2 is a time companies would get ready to go. And I think you saw probably as good as a backlog as you've seen in years. That it was as bad of a time as you've seen in years between 22, 23, and 24. The market started to open up a little bit across the board, right? We saw some crypto IPOs, we saw fintech IPOs, we saw traditional SaaS IPOs with things like Figma. And now people thought, hey, it's going to be open, and it's going to be open for companies of all types, both sector-wise and size-wise. And now all this uncertainty is kind of hitting a pause button. And there's probably two uncertainties that people are thinking about. One is macro uncertainty, war, trade, regulatory. And then what's going to be the gravity that these mega guys have? And even if you're doing $1 billion in revenue, you're profitable, you're growing, will no one care? Because everyone's just staring at SpaceX, OpenAI, Anthropic, and trying to figure out both. And I would also say
in terms of like the retail story,
interest, I've heard from some companies it's getting banker interest because bankers are like, if I could raise $50 billion from Anthropic, this is going to be a huge year for me, for my firm. So I got to stay close to Anthropic. I'm not going to be bothered with which was historically a great IPO, a $500 million IPO. If I could just be part of that syndicate I need to focus on, where the money is.
Say, this is a thought exercise. Like say
Sure.
SpaceX or Anthropic did their last fundraise on the public markets versus the private. Do you have an intuition of where they would have gotten a better price? Like they stay public, capital's scarce, they leave room for sort of the growth in valuations, or do you think, in some ways the private markets have become more bullish than the public markets?
It's the age-old question. I mean, if you look at the secondary markets, it definitely depends on buzz. So we have companies in our portfolio that we keep an eye on those very increasingly liquid secondary markets for probably the first top 20 or so positions. We just named about 5 or 7 of them. There's probably another 15 companies that we could rattle off that have liquid enough markets that the trading price matters. The buzziest ones trade at a premium to last round. The ones who are not as buzzy trade at a discount.
And you think that tracks with the public market?
And I think that's a better predictor of public markets than anything else. And historically, and it's also because they raise so much money and those syndicates are so broad, tending to be with crossover investors, right? So if you see a Bailey Gifford, a Fidelity, a BlackRock investing in a big private round, they're kind of pricing it like an IPO. I mean, that whole part of the market has been somewhat wiped out of small cap tech investing. And that used to be going back to the 90s. There used to be companies with like a $300 million market cap where you have a whole sector of people that would follow it from 300 to 3 billion. And it was an somewhat inefficient part of the market, really good part of the market that billions of dollars were invested in. And that just doesn't exist.
So you predicted SpaceX OpenAI would probably still go.
Yes.
Any other predictions about what you think happens?
I think Anthropic goes. I think Stripe waits till next year.
Stripe never wants to go public.
So I don't think Stripe ever wants to go public. They have a great business. They're able to, the things that they need to do of raising capital and providing early employees and investors liquidity, they've been really good at doing in the private markets.
I'd heard chatter that Thrive was sort of signaling to people, you should never go public. Like we'll do vehicles. And there's this argument that there's this sort of private investor class that has an incentive. It's like, if I'm going to get exclusive access, you don't need to get scrutinized on the public markets. I'll price you, well, I don't know. What do you make of it? Does Stripe ever need to go public?
It doesn't. Because they're getting the benefits of being in the public market of liquidity and capital. Is there some other reason that they need a depth of capital that they can't get in the private markets? As the private markets have evolved, there's a tremendous depth of capital. Like, 20 years ago, you weren't seeing sovereigns. You weren't seeing large institutional LPs who are co-investing in these large rounds. And it's two things. It's companies are wanting to stay private longer. What you're seeing is bigger outcomes when the companies do go public. So the venture capitalists who stick with them are being rewarded tremendously. And then you're seeing an absence of whether institutions or public market investors being able to participate in the small cap tech, they're going back into the private markets. So the venture capital industry has totally subsumed that whole sector. And they've done it kind of somewhat slowly and quietly. And maybe, at least we have a growth fund unintentionally. But I think you're seeing great value creation there. And I think the LPs and the institutional community is saying, hey, if I want access to the best companies, I have to get it through the best venture capitalists.
All right. We have to talk SaaSpocalypse.
Yes.
Are you, in the abstract, sort of buyer or seller of Figma? Like what's your, to pull one or,
Yeah. I know a little bit about Figma. I know they put up great numbers, right? 136% net dollar retention.
You got more numbers on it than I do off the top of my head.
Yeah, they grew about 40%. So they're back to being a Rule of 40 company. They've gotten beaten up in the public markets. I think they're down about 70%. Depending on the day this comes out. So that's a very, very good company. Probably the best SaaS software company that went public last year. Maybe one of the best companies the last couple of years. Excellent CEO, and transitioning into AI. So I haven't followed the story completely, but I followed it through the IPO, and they had a whole AI strategy
at one of our events last year. The CEO,
yeah,
and they have they're responding to the vibe coding thesis.
Yeah,
they're really
he's
trying to evolve the product.
He's trying to evolve it. Right. I mean, they're competing on the edge with the Replits and Lovables over here. Obviously, competing a little bit with Adobe on the collaboration side across SaaS. They have a pretty big market space. So I think that like a lot of other things, if you have a big market, you have an excellent CEO. Hopefully, when somebody else throws the baby out with the bathwater, that's a good opportunity. I think some companies, and it's no different than how we think about SaaS and software investing today, that you have to be two things. You can't just be workflow, because that's being commoditized incredibly quickly by companies that could do that. So you need to have some sense of a network effect and collaboration. And then the most important thing is having access to proprietary data, right? So data is the oxygen for AI. It's also the moat in AI. So if you're either building horizontal or vertical software, how do you have access to that data? Because that's what's going to enable you to compound that competitive advantage, grow over time.
Your answer on Figma, not that it's more of an example than anything, but
answer on Figma is people have blanketly said SaaS is dead. Some SaaS companies are dead. I think Figma is a very good company, which is not dead.
Right. You buy into the move against SaaS, but you think there are companies that will sort of disprove
I think there's some SaaS companies, especially companies that haven't evolved and developed. And there's I don't want to name them, but the companies that maybe even gotten taken private by private equity companies, who then cut R&D, tried to milk that user base. That user base is probably tired of getting milked. There's a new AI forward company that provides a lot more value at probably a similar cost, that they're going to be taken out. And those companies then, as you start to unwind those companies, then especially the ones that are burdened with debt, you can't reinvest in the company. I agree with
you on sort of the private equity company that allowed their customers to hate them, and now the customers have a tool to say, "Oh, we can do what we can build custom much more easily than we could before." Yeah. You're extracting everything from us. We don't want. But what about like a Salesforce? I mean, it's interesting there because on Salesforce was on the come up. In some ways, it could have been presented as a Oracle versus Salesforce story, but Oracle has also done tremendously well since the rise of Salesforce. So that's been sort of a response, like, why does software necessarily need to get decimated just because there's a new generation of company?
And it's not like they're sitting on their hands, right? Salesforce just yesterday bought one of our companies, Momentum, that is very AI forward. And they have obviously amazing distribution. If they can buy great products to plug into that distribution, that's kind of how Salesforce has grown over the last 25 years. And so now that they have that great distribution, are they being thoughtful and careful about what products they build, buy, and partner with to drive out there? I don't know enough about Salesforce to see how they're competing across each of those things, because Salesforce does so many things today. But I know they're not thinking, I know they're not crying in their beer. I know that they're being aggressive and being out there and getting stuff done.
Right. They're very loud on agents and embracing the change. Yeah. On the other hand, it does sort of have some of the workflow. Like a lot of their strength is, you're doing sales. We do sales. Like, well,
yeah, you're doing sales. Can you put this in this other database? Right. And should you send that person an email who might buy something from you? That could be agentic. But, and then a little bit of the problem with the public markets is, can you slow down to speed up? And will the public markets give you that grace to say, hey, I'm going to need to disrupt myself. I'm going to need to cannibalize myself either on pricing or on product. And, that'll be the best thing for me in the long term. I think the best CEOs get that grace. I think, Benioff probably is that. You'll obviously see Elon, who's done some things like that you're going to be able to do that. And then it's going to be the expectations in the public markets. A key thing being pricing. And historically, SaaS is priced on a seat basis. Well, there's a lot less seats.
Right.
People think there's going to be a lot less seats. And
a complicated transition to make if you have to swap your business model, take risk, especially on the public markets.
Yeah. I have to reinvent myself. I have to sell a new product to an existing customer that I'm going to charge less for, and they're going to want to buy less seats, even if they live with that seat-based model. So my new product that I'm going to take years to develop, I might be able to sell to an existing customer for less. That's a bitter pill to swallow.
Changing gears to another important topic. What do you make of the Block layoff? 40% of their employees. Is that specific to Block, or you think more to come?
I think that's going to be a trend. I mean, Shopify famously has been able to grow revenue over the last couple of years, 70%, while keeping the employee base constant. There's two things that are happening there. I think people grew very inefficiently during COVID, and this might be the last piece of saying, all right, let's reset ourselves. How many people do we need, especially if we're here in person and we're able to act more efficiently? All right, that might be, how did we look at the end of 2019? And how were we able to generate efficiency then? And then on top of it, where can we add agents? So I don't know many companies who have done that analysis incredibly well. Obviously companies I'm on the board of that are smaller, easier, more centralized, or doing less things. It's easier.
But you think it's more overhiring than agents creating value today?
I think it's less focused on efficiency in the near term, and then more agents over time. So if Block takes out 40% of their employee base, that employee base might not grow that much.
Right. They have the confidence as sort of what they're trying to lean into in terms of new capacity is more
and famously X, not only did they take out a whole bunch of people, but they didn't grow that employee base.
Yeah, X will be fascinating. Unfortunately,
how much is
we will never necessarily know how well he did with that whole deal or not. I can't imagine SpaceX really has to get granular about the performance of X.
It'll be interesting. It'll be interesting to see. I mean, they'll probably have to report revenue numbers. Maybe that's about it. I'm not thank God I'm not a securities lawyer.
What, in terms of sort of the AI deal making that's been happening, I know you have some point of view on that. Like what, I don't know, revenue round tripping, I guess, is the most charged way to put it. But to what extent do you think these deals, including now with Amazon wanting OpenAI to use Tanium chips, are I pay you to spend money with me?
Yeah, and then there's some of it's off balance sheet with private credit that I'll give you some equity. You'll agree to buy my stuff. We're also going to put this private credit thing that's off balance sheet. We somewhat opaque. That, opacity has never been proven to be good for shareholders, right? And transparency is the key thing if you're not really transparent and straightforward about something, what are you trying to hide and why? And it's not because it's so awesome that, you want to hide it from the public. So I think that's going to be a case, I think the thirst for AI will let this go longer, right? So every new technology that was incredibly CapEx intensive crashed, right? Whether that was the railroads or television or fiber and the internet.
At some point we will overextend.
At some time we'll overextend because there's no one ever says, maybe I'm okay. Maybe I don't need dessert tonight. Everyone's like, ice cream and all some gummy bears and hot fudge, and you continue to get rewarded, right? As the hyperscalers have said, I'm doubling down on AI. I'm spending more. Stock price has gone up. So not only is there an ego thing of hey, I'm looking next to me and I got to keep spending to keep up with my my fellow hyperscaler CEOs.
My stock price will go up.
When I do that, my stock price goes up. And I remember going back to the old infrastructure CLEX in the early days of building out software that they came up with a metric of you got valued at 7 times whatever CapEx you put in the ground. And that became a metric for next generation telco companies and internet providers in 2000. So, what's the incentive there? You will put as much as you can in the ground.
And it's insane in retrospect to think internet providers were once, obscenely valuable.
Well, and that every dollar, once that metric came out, that every dollar you spent, it was worth $7. Your only incentive is just to spend as much as you can, as quickly as you can, by getting dollars however you can get them. And I'm not sure we're at that point now. I think you're still seeing GPUs be somewhat There's no dark GPUs. There's no dark data centers.
What do you mean by that?
So there
Just
was
not being used?
in the fire when people were laying fire. They called it. What percent was dark? It wasn't being used. We haven't lit that up yet, and therefore we're building things for tomorrow. And don't worry, the customers will come. And eventually, you just build too much.
Right now,
inventory.
NVIDIA has been great about projecting. There's more demand.
Yeah,
we could seemingly set whatever price we want.
Exactly. So they said, in that analogy, the dark fiber people were overbuilding, saying eventually the customers will come. And they did. It was just 5 years too late and all the companies went bankrupt. In this case, they are saying as many chips as I could produce, someone's buying them. And actually, I could charge whatever. And there's a line outside the door. They're also investing in companies to buy their chips and round tripping it. So you don't know what real demand is. But until you see a little bit of stopping of real demand, and some of that demand being driven by consumers, some of it driven by enterprises, maybe a lot of that demand being driven by fear in both enterprises and hyperscalers, it's not going to stop anytime soon.
But you think it has another year or 2 years?
Yes. I just think that given how we're seeing some of these companies scale, given the fact that the capital markets seem wildly open for them, even as OpenAI has hit some choppy waters, they still continue to raise a lot of money at very high prices.
OpenAI in particular is insane because it is still a nonprofit. Obviously, they resolve some of
but they're
structure,
still going to court. They're still, that'll be interesting. Another interesting disclosure when they go to court, I think later this year, right?
Right. They're in a big legal battle with Elon.
Yes.
It's just you can see how Anthropic is a less complicated company to invest in, where they're selling to businesses. They're more eager to be profitable. Whereas OpenAI, it's like weird structure, all the legacy problems of being a first mover.
They have some consumer-facing stuff. They have some agentic stuff. They have some infrastructure stuff. They're going to get into specific agents. Are they going to?
You don't have a bet, right? You're disinterested.
I'm not in either of those. And then, how does that stack of, there's going to be consumer agents. Some of those consumer agents are going to be shopping. Well, they don't have a commerce strategy. They have a commerce strategy, but they don't have commerce revenue. They have an ad strategy. They're just getting into ad revenue. They're going to do specific roles for you. They're going to be involved in healthcare. No one's quite sure exactly what that means. Are they going to be your payment agent? Are they going to be your healthcare coach? Are they going to be your doctor in your pocket? And then you're like, wow, these guys are kind of trying to do everything, which was why Sam did the code red a couple months ago. It's like, hey, we're doing everything, and we can't fight a battle on every front.
I mean, I wrote a piece being bearish at 157 billion, which seems clearly wrong now.
Yes. I'm sure you're going to edit that out.
Yes. No, I'm still bringing it up. I can't help myself.
Joking.
I wear my mistakes on my sleeve. I mean, it's just very hard to call, pricing tops in new markets. I mean, I remember when Silicon Valley was super divided about Uber at 3 billion and thinking that was, so far ahead. So it's really hard to know. We will overextend given the nature of how these things go.
But then the markets could. I forget who it was Druckenmiller or Julian Robertson. The markets can remain irrational longer than you can remain liquid. So betting against a market, especially a runaway train market like this, is really, really hard. Which is, as in the venture markets, how do you kind of don't get irrationally excited about it? Stay close to your knitting. Continue to invest in the strategy that you've committed to yourself, your LPs, your partners about, and continue to do good deals in that space, and good things happen.
How are you playing it on the private markets right now, or where do you see investable opportunities in AI?
So we see really three different things. We've begun to see consumer AI experiences, and actually, we do a lot on the consumer side, even as people have abandoned consumer.
You did Riot Games,
Riot Games, yes. We're the seed investor in Riot, and they've gone on to be the biggest video game in the world over the last 20 years. So gaming is really interesting, that non-player characters can be agents, and therefore it makes the game more fun. Assets and games can be created much more cheaply. So we've looked at a lot of things there. We've looked at things of what are next generation social networks and social constructs company called People that does, you can have a digital twin who exists out in the world as an agent for you. You can have a digital friend. You can have a digital pet. And what does that mean as these other things that are out there in the world, whether your pet or your digital twin, are now interacting with yours? So like, hey, digital Rick, go with digital Eric and go get an ice cream cone at the Yankees game and then send us pictures. And that's like,
I can't claim to understand. What's the appeal, or what's the?
It's no different than Roblox. Of you're basically able to have something else that extends your social experience, and everybody.
It's like, oh, we were hanging out. I guess we're friends now. You know, it's like we outsourced.
We were in school. We were working. We were doing a podcast. Send our digital twins over to Yankee Stadium and send us pictures. So you can be social even when you're working.
But what I want from being social is primarily like the experience, right?
You're getting old, man.
What I want the networking of it, yes. Or like the
or you want the experience, or do you there's obviously a whole generation that's grown up that want the likes and the friends, and
you want the sort of signal
adoration,
of like
hey, look at little Rick.
You're like, if Instagram, if we're going to the aquarium performatively on Instagram, like why go at all? Just like have the
if you could get likes, thumbs up, points for having a very cool picture of little Rick and little Eric, at the Yankees game. That's just another way you could do things when you don't have to do anything.
It's an accelerationist view of getting rid of Instagram. I think there's going to be agents, or it's not just a flat photo that you're hoping because you put a good filter on that people will like. You have people doing things for you. So whether it's the dating market, the social media market, the gaming market, the commerce market, we've done a lot in digital health on the consumer side, which we think is going to be transformed just because healthcare is so broken. Better. AI could definitely make that better, faster, and cheaper. And then on the enterprise side, we have two sides. We call it application layer enterprise AI that we talked a little bit about, having data and proprietary access to data, and the ability to use that data to create new applications, new agentic applications. We're also seeing companies like Crisp who create enterprise applications. So think about supply chain. If I'm able to have an agent, if I'm able to have my data and your data, I'm Mondelez, you're Walmart, somebody else is Unify, which is the logistics company. How do I understand how that works and then be able to put intelligence on top of a multi-hop data system? And you think about the lock-in of that if you're across enterprise, and the data network effects which would exist and why that's really important. And then even, the third bucket might be on the infrastructure side. A lot of Fortune 500 companies are still trying to pull data out. A lot of these companies have grown through acquisition. They have a spaghetti of all kinds of different databases, software languages, all that stuff. And they're just trying to unlock that data. And there's a whole generation of companies that are doing that. And then what happens when you unlock that data? Holy shit, is that secure? And who gets access to that? So I have this data. Who's getting access? Are the agents getting access to that? How long does the agents have it? So if the agents has access to your credit card and financial information all the time, well, what is that agent doing? What are they going to do and why? I'm very interested in what company is actually willing to play gatekeeper for agents spending your money, right? It's like, Is it the actual application? You can see existing, like a Plaid or something, but it doesn't seem like a lot of companies, I think, are wary about signing up to be the one that says, yes, this is safe to let your agent go spend your money on your behalf.
And where does that data go? Even if it's just your bank account number. Like, oh, you could go buy me that sweater, but so what does that agent give that bank account to another agent who gives it to another agent? And what does that mean? Or if it's even worse, Social Security number, which you can't just cancel and get another one tomorrow. How does that data exist? Whether it's payroll data. So we think about that. We've had made
Do you have a bet in that space?
Yes. So we have a couple of different things around that. We have Daytona, which does sandboxes around agents to keep them more secure and running specific things. We have LM Studios, which manages data around this problem. And we're looking at a lot of things because, one of the best and worst things about agents is they're always working. Right, so they're always working.
I know we're gonna.
You hope they're doing good stuff, but if they're doing bad stuff, they could really.
A new anxiety we're inventing right now is this sort of when you wake up, you have to see what your agent did.
Yes.
It's like, have I been productive overnight? Did I set everything up so that the nighttime agent work was super useful and I have stuff to do today?
So, or did they take my credit card on a shopping spree with Little Eric at the Yankees game?
What I mean, games and consumer is obviously the most fun. I mean, what in gaming in particular are you optimistic about, or have you made any bets yet?
Not recently. We looked at some stuff in terms of content creation. We looked at some stuff in terms of pure content creation. So if I wanted to play you in a game, we could create a much better game than we ever could have, right? So there's kind of next generation unities, which is game creation, game engines. Either game engines are able to leverage, existing IP, and they work with companies like Disney or Epic that leverage existing IP. So that game creation is going to be easier, no different than it's just easier to create applications or anything else like that today. So we've looked at those things. It's hard to create a lot of long-term competitive differentiation. So there's a lot of these companies who are doing it. They're all creating a lot of value, but it's hard to say where they're creating long-term competitive differentiation. So we haven't done anything there. We have companies that are creating really good agentic non-player characters, right? So NPCs is the term for them. They used to be you had an NPC. It was like
I know. Well, NPC we would trivialize humans by saying you're just an NPC.
Exactly.
Now we're gonna have agentic NPCs. It's like it's very fully fleshed.
So those were like the stormtroopers. You're gonna go straight ahead and you're just gonna shoot them. And now these NPCs are gonna be smarter, and there's people who are making smarter NPCs. And that's kind of interesting. But again, there's lack of differentiation. What we're really probably most excited about on the game side, because I think that more people are playing more games, and maybe even some AI will let people work less and therefore play even more games. And we both love playing games, is the opportunity to create independent studios, right? So Riot, despite being enormous today, was an independent studio who said, we were able to bring League of Legends to market for about $6.7 million, which
you would just bet on a game.
So I think there's going to be small teams of game studios who have different play patterns. We've looked at things around audio being a really interesting thing because the ability to use AI to ingest audio and come back with audio. So are there audio formats which are really interesting and different? Are there interfaces that are different? Looked at a company that does kind of audio formats on TV. So can you play us?
They're some of my best friends. I host events with them, so I know them very well. Yeah,
there's a couple of them. Yeah, really good. That's So are there different ways that hopefully I'll meet somebody that'll say, you know what, we thought about all these things, and we believe with like a handful of people we can come up with a game. It'll be completely different. It'll be audio or voice driven, and it'll be super cool and fun. And we'll pull in all these things. It'll be social. They'll have agentic NPCs, and they'll do all these things. But we oftentimes spend a long time looking at mega trends and figuring out what's going to be it. And then you have to find that special entrepreneur, the way Brandon Beck and Mark Merrill were at Riot, who were like, you're actually saying what I've been trying to articulate for years.
This is an old one, and we don't need to spend a lot of time on it, but the whole Major League Gaming, did you guys make a play in that world?
We didn't.
Because I wrote about it and I got excited. Founders Fund, didn't they even make a play? This sort of, obviously, Activision went big on having
more broader esports, right?
Esports.
So there was a whole bunch of things in esports, so there was teams, there was leagues, there was some other things.
It died, right? Has that, it's not happened. If not the pandemic, when, right?
It died a little bit. There's two reasons I think it died. That different than Major League Baseball or the NFL, a lot of the rights and the IP was so controlled
by the games
and the developer publishers that you really were just playing someone else's game, and you had less control.
And then then they got built sort of as marketing for the games.
Exactly.
But then because it wasn't a real business, they didn't have to set it up in a way.
And you can only play in certain places, and then therefore the rules were very much dictated by that. And there were some very big companies. 100 Thieves is still a really good company growing in that space. 9 Liquid. There was a lot of companies that were very valuable at a time. But their ability to gain audience didn't let them capture as much value as I think people would have thought. But they're still a really active, Riot, sells out, any kind of regional event. I think they sold out. They had a 3-day Champion Worlds in Paris this past summer, and it sold out in 8 minutes. So people still love it. People still enjoy watching it. I think that just the developer publishers are capturing the lion's share of those economics. A
big portfolio company of yours is Ro.
Yes.
It's a fascinating space given the rise of GLP-1s. What's your read on sort of their business today?
Yeah, I think, again, we're talking about megatrends, thinking about the rise of GLP-1s, the rise of direct-to-consumer healthcare, the ability to put the patient first. So, one of the things you look at for as venture capitalists, incredibly large markets where people are paying a lot of money and are very unhappy with the service. And you think about healthcare being very clear in that people pay a lot of money for healthcare, either as an individual or even an employer, and the government being the other very large payer who doesn't feel like they're getting their money's worth. The patients are unhappy. The payers are, tend to be unhappy about everything. And so, how do you fix that? I think it's around 6 weeks to get an appointment with a doctor today in America. So if you think about all the things you could use help on, and when you get an appointment, you get about, 10, 11 minutes. So it's not like, people are really, really have the time to really provide personalized healthcare. Can you do something in a better way with remote access, with AI to help that provider know what's important to you and why, and then to solve very large problems. And, GLP-1s and, obesity have been a huge problem for a long time. GLP-1s have now been proven to be very helpful in a lot of other conditions. And
are they still able to produce them? Because for a while they had the opportunity.
So there was...
There's like a scuffle there.
Yeah,
right?
GLP-1s became so popular that there was a global shortage. And if there's a global shortage of a necessary medication, the FDA says, okay, we're basically going to suspend the patent. And we're going to let people compound their own drugs. And then when that shortage is over, it flips back and says, hey, you got to respect the patent again. And that's been a lot of chop in the market with different players. Ro has been incredibly good about respecting those patents and saying, okay, when we need to compound to be able to fill that consumer demand because there's excess demand, we'll do that. And now when that's not there, how do we partner with the Novo Nordisks or Eli Lillys of the world to provide the best possible medication to the right person at the right time at the right price? And that's moved on, and they've continued to provide a great service. They're kind of, Morgan Stanley put out a great note saying they're kind of the Spotify of direct-to-consumer healthcare, that you're getting a premium service in a white glove way, and you feel like you're being treated like this is a really good service, and you're a patient and you're being treated even as a patient like a customer finally. And I think, the growth of Ro, kind of riding that tide of GLP-1s and that being maybe the most important drug of the last 20 years is going to be a great story for, some of the stories they tell and how they've changed people's lives, the ability to access healthcare, and then from a digital health side, how it's really changing the way that pharma companies go to market and the impact they're able to have.
They can get the consumer excited about a drug that's good for them and not wait for doctors
they hear it
to
and they go see it, and then if they want to have access to it, they have access to it. There's now a bunch of different formulations. You could get a pill, you could get a shot, you could go from Lilly or Novo Nordisk. There's different providers, and therefore you have the ability to say, hey, this one's right for me.
It's differentiated in some way.
Yeah, well, there's enough providers out there that this one's right for me. Hey, I'm afraid of needles. I'd rather take a pill. I'd rather, pay less or pay more for maybe a different brand, no different than anything else. But, here's what I definitely know I want. I definitely want to be able to take this drug, which is proven to help people lose weight, push off dementia, have a lot of these other knockdown effects. And I want it delivered to my house. And I want to be able to do my regular checkups. I want to be able to check on, make sure there's no side effects. I want to be able to do that right through my phone and get what I believe is a very high quality service. And that's, this next generation of companies that are able to provide a very high level of service, delight their customers, and then have, a huge viral effect.
FirstMark was an investor in DraftKings.
Yes.
The prediction market companies, have you made a play there?
We have not, and not because we were investors in DraftKings. We looked at some of them, maybe because we were concerned about the regulatory environment.
You're like, we were deep in the regulatory environment,
yes.
And these companies don't seem worried about it.
We lived through it.
Right.
And felt some of the pain of that. And these companies didn't seem concerned about it, which gave us some concern.
Do you think the prediction markets were always sports betting companies?
Yeah.
In sheep's clothing, basically?
Well, I think now you could look at and whether it's the banks or everyone else doing research, I think it's 85+% of the prediction market stuff.
Definitely now betting. It is. I mean, for a little while they had us excited about, elections and everything. Yeah, and then all of a sudden it's sports betting.
And then, I was even over in Europe for a board meeting during the NFL playoffs. And I wanted to look up, I think it was, how long people thought the PM was going to stay intact in Great Britain. And I go to pull up my prediction market, and I couldn't even get to how long that PM was going to be there because it was 8 pages of NFL playoff ads.
Do you think there's eventually a crackdown?
I think it's going to be interesting. I think the current administration is not going to crack down. I think that might change under different administrations. The key thing is California, Texas, and Florida, a huge part of the U.S. That were, at least California, actively voted to not allow sports gambling. And then now sports gambling exists. So what does that mean? Maybe under a different administration or someone's different way to view it, or has this completely just, the horses are so far out of the paddock that it's like we can't turn this back anymore. Which I think would just grow that market tremendously. And I think DraftKings just had their investor day, and they said maybe we were not on our front foot on the prediction markets because we were trying to be is so good on the regulatory side, but they were able to buy a company in prediction markets, and they believe this has grown their TAM tremendously. So I think all those companies will benefit from it. Flutter and DraftKings on the current public side with their brands they have today, but then obviously Kalshi and Polymarket. And
are you still DraftKings as an investor?
As an individual. I still own a lot of the stock I got as an individual as part of FirstMark, but we've distributed all our stock.
This sort of political swing is interesting, sort of closing out with, the IPO conversation again. I mean, do you think some of these companies, they sort of need to go public in a Trump era, like the SpaceX and Elon's, where he's so close to the administration? I think it helps them.
I don't know if you have to rush out before the midterms. I don't know if the market cares that much about like rushing out before the midterms. If something happened in the midterms and then that emboldened the Democrats to say, hey, these prediction markets are, we're after them. We're after them, and that's going to be a huge piece of our 28 platform. I think, if you're a Polymarket investor, you'd rather be out than in.
Right. You'd rather have just already gone public.
Public, and at least I always think, and this might be a bias I have, that if you could get out and you think there's going to be something rough ahead, you're better being out where you have more access to the financial markets, even though it might be harder or more expensive than you might have thought. And you at least have some liquidity for some of your early employees and investors They might not be happy if you hit a speed bump with the stock price, but they'll be more happy than if you were private. So you just have greater degrees of freedom to operate. You have to provide more transparency. But if you're uncertain about what's ahead and you have the opportunity to be a public company during that time of uncertainty, and obviously if you have a great CEO, you want to be out.
Rick, thanks for coming on the podcast.
Awesome. Thanks. Great seeing you, man.
That's our episode. Enjoyed having Rick on the podcast. Thanks for sticking around to the end. Please, if you've made it this far, you've got to like, comment, subscribe. Excited to grow the channel. And of course, you can find our writing and reporting on Startups and Venture Capital at newcomer.co. We also host events. You can check out what we're doing at newcomer.events. Share other podcasts. Help us get distribution. Support the channel. Comment. Support. Like, comment, subscribe. You know the deal. Thanks for being on the journey with us. All right. See you next week.